Q6b had an average of 47%, which is actually quite pleasing given that this was a discuss question. So what you were asked to discuss was strategies the business could implement to overcome the problem. So if you've watched the facts of the case video, we just want to go over what is the problem. What they're currently doing is they're making all sales and purchases of stock on credit, and the terms for debtors are a 5% discount if paid in 14 days and 30 days in total to pay, whereas creditors are provide us credit terms of 30 days, and then we've been given the graph of creditors and debtors turnover trend. So what that showed us was in 2011, on average, we were collecting debts from debtors in 34 days and paying back creditors in 36. We were 2 days ahead. We were getting the money from debtors from selling stock and using it to pay creditors for that stock 2 days after we'd gotten it, which is excellent. But by 2015, we weren't getting the money from selling stock for 43 days, yet we were paying the creditors for that stock in 26 days. We were 17 days behind, so that was our answer to question 6A. The question we're asked here, though, is discuss strategies we could implement to overcome the problem. So the first thing we need to ask is, well, what's the problem? The problem in this case is we're short of cash and we're using our overdraft regularly. So what we want to do here is discuss. So let's break this question down. We want to look at strategies to fix the shortage of cash and the overdraft situation, and we want to discuss them. So what does that mean? It means each strategy we come up with, we want to look at either positives versus negatives, pros versus cons, strengths versus weaknesses, etc. So when you think about it, to answer this question, we're basically trying to improve the cash situation from debtors and creditors. So there's only 3 possible ways we can make this better. We could firstly decrease the amount of time it's taking for debtors to pay us. We could increase the amount of time we take to pay creditors. And the third option is, well, we just go and get more cash from somewhere else. So they're really our 3 options. So what we're going to do is come up with strategies that would do that. So for example, we could come up with a strategy that will decrease the debtors turnover. And for that strategy, we're going to come up with 1 pro and 1 con. We might come up with a second strategy and do the same. If we're going to argue that we should increase the creditors turnover, we're going to come up with pros and cons. And same with getting more cash into the business. So that's a template of how we're going to answer this question. So what we'll do is just take one option at a time. So it's a 6-mark question, so we're really looking for some, I think it was asking for 2. So what we want to do is for each of these strategies, come up with a pro and a con, and that'll get us 2 marks. So in this case, decreasing debtors turnover in days. A strategy we could do to achieve that is to provide higher discounts to debtors. Now that's where we use the information we were given. We were told we offer 5%, so why don't we say let's offer 10? So if the pro for that would be, we'll get the cash faster from our debtors. We also need to consider the negatives there. If we're going to give a 10% discount instead of 5, we're actually going to get less cash overall. And secondly, we're going to increase our expenses because discounts are an expense, and that will lower our net profit. So that's one strategy discussed. Another strategy to decrease debtors turnover could be improved debt collection methods. We could hire debt collectors, perform credit checks, etc. So the pro in that it would take the average time obviously to collect debts would decrease, and debtors with poor credit histories, if we could research that before we offered credit, we could weed those people out before we even sell to them, and we wouldn't have as big a problem with our debtors turnover. What are the cons? Well, if we're going to hire people to do debt collection and credit checks and so on, that's going to increase our admin expenses, which will lower our net profit. So that's another strategy where we've looked at the pros and cons if we implemented it. Another strategy we could implement to decrease debtors turnover is, why don't we decrease the credit terms? Now I've suggested going from 30 days to 21, but you don't need to give a number. We just need to suggest that, well, okay, instead of giving debtors 30 days to pay, if you give someone 30 days, they're probably inclined to pay at the last minute around 30 days. So why don't we reduce that to 21? Now, if we do that, we're probably going to get debtors to start paying closer to 21 days. But the con is maybe debtors start buying from somewhere else, because if we go to 21 days but our competitors are offering 30 or maybe 45 or 60 days, well, people aren't going to shop from us anymore. Another strategy to decrease debtors turnover is we could increase that discount from 14 days from 5 to 10. We'll encourage debtors to repay faster, And another con, so we can use this again to discuss it in a different way, is it could actually be a good sales technique. So not only we spoke about getting debtors to pay faster, but we could discuss this from the viewpoint that it actually might, if customers know they're going to get a bigger discount from me, they might leave my competitors and come shop from me. The cons of that are the same. We're going to increase our expenses and lower net profit, and we'll also reduce the total cash received. One more strategy to decrease debtors turnover is we could conduct an age analysis of debtors. So that's a topic we've covered during the year. The pro is obviously we can look at how many days our debtors are taking to pay and where each debtor sits. Are they in from 0 to 30, 31 to 60, 61 to 90 days, etc. And we can then identify any problem debtors and follow them up. The con with that is we're going to have to hire somebody to do it, so that'll increase our admin expenses, which will also lower our net profit. So there's 5 strategies we've gone through, and that's just to talk about how to decrease debtors turnover. Let's look at some strategies to increase creditors turnover. So half the problem is debtors aren't paying fast enough, or the other half of the problem is we're paying creditors too fast. So one thing we could do is, well, creditors are offering 30-day terms, so why don't we pay around 30 days? At the moment we're paying within 26 days. The pro of that is creditors don't offer any discount anyway. We read the question, they're not actually giving us a discount. So there's no actual cost here. We're not actually going to pay more money. We're not going to or lose any net profit benefit from getting discounts. So we might as well pay right on the day. If we're not going to get a discount, let's just pay on 30 days. The con there is maybe we might like that, but our creditors probably won't. The relationship with our suppliers will deteriorate. They may even decide to lower their credit terms and maybe even withhold credit from us completely. And we're always paying in 30 days, maybe they start to lower their terms as well and they move theirs down to 21 days too. We could increase our creditors turnover by going and finding different suppliers. We don't have to shop from the same person. Can we go and find somebody who offers longer than 30 days? Pros, well, that'll allow us to increase the creditors turnover. If someone's offering 60-day terms and we're paying in 50 days, well, they're going to be very happy with us and we've reduced our cash flow problem. Creates less pressure now to decrease the debtors turnover. If debtors turnover is still 46 days and we don't have to pay for 60, we're actually looking at a very good problem in terms of our cash. However, maybe it's difficult to find people who will let you pay that infrequently. That's obviously ideal for us, but most businesses probably don't want that situation. So it could be hard to find a supplier willing to offer it. It's also a short-term solution. Really, if we're buying from people at the moment and we're happy with them and happy with their product, we should probably look at improving that relationship than going to find a new relationship. Our third option was, well, why don't we just go and get more cash into the business? If we are continually in overdraft and short of cash, why don't we just, for example, go and make a capital contribution? So the pro of that would be we've withdrawn or reduced our short-term cash problem without using the overdraft. But the con there is it's money coming from the owner. So whilst this does increase their equity in the business, the owner is not an infinite source of finance, and we don't want to have to rely on the owner giving the business money all the time. Also, if we increase equity, it will actually reduce our ROI, so sort of relating topics there. One more thing we could do to get more cash into the business is we could actually start making sales on a cash basis. If we read the question, we're selling on credit all the time, or why don't we sell on cash? What the pro of that would be is we'll get the money immediately from customers, and it will also reduce all discount expenses and bad debts. We simply won't have as many debtors, so we won't be giving as many discounts, and if we don't have debtors, we don't have bad debts. The cons of that is, well, if we're going to make people pay up front, customers might switch to competitors who do offer credit. Another way to get more cash into the business, why don't we go and borrow money from the bank? So if possible, maybe get an interest-only loan so we don't have to make repayments other than the interest in the short term. So the pro of that would be in the short term, we're going to resolve that cash flow problem and we won't have to use the overdraft. The con is obvious. We're going to have to not only pay it back, we're also going to have to pay interest expense as well. Looking at how the state answered this question, so it's a 6-mark question. The best way would probably be to come up with 3 strategies, 1 pro and 1 con for each. Looking at the top end, only 3% of students could get 6 out of 6. Discuss questions are always difficult. try and treat it systematically. Interestingly, the examiner didn't make any comments on this question, but obviously it was, most kids could basically get about 50% just by coming up with some obvious strategies. But to get the full marks, remember to discuss pros versus cons, strengths versus weaknesses, and so on.